All right, hello, everyone. Happy Monday. I'm Greta Wall. I'm your host today for this weekly market check-in with myself and Derrick Oldensmith, the leader of T3 Live's ProDesk virtual trading floor and a professional prop trader with T3 Trading Group. Happy Monday. How's it going today, Derrick?
I'm green. Green is good. I'm happy. It was a great long weekend. How are things with you, Greta?
Pretty good, pretty good. Good long weekend. It was nice to have some time away. All right, real quickly, just a look at the positions that Derrick is currently in. Again, he is a professional prop trader with T3 Trading Group. So just a disclosure of everything he's currently long, short, flat, as of 12:24 p.m. Eastern time today. All right, Derrick, it is a brand new month of trade. It's the first trading day of December. It's the second day of the month, the final day of the year, the final day of the quarter, or final month of the quarter. So a big month and typically a pretty good month for the market. How are you feeling about December as we come into this first day of the month?
I'm feeling bullish. I am feeling bullish. I've been bullish. I continue to feel bullish. I think that this upside grind that we've kind of been in really should continue throughout the rest of this year. It's not going to be a straight vertical move up. I think it's going to be a grind. I think it's going to ebb and flow. But everything I'm looking at, from positioning to the forced buying to the technicals, everything I'm looking at is continuing to say full steam ahead, at least for the time being. So that's what I'm positioned for. That's what I'm looking for. And that's currently what's happening.
When it comes to December, you and I have talked a lot lately in the past, since like September, about seasonality in the market and those kind of trends that happen typically every year. When you look at December, what are the seasonal trends that you're counting on being part of your game plan when it comes to this month?
Sure. So December is a strong month seasonally. I think this November-December kind of combo period is like the strongest period of the year. There's still a really strong underlying bid from the corporate buybacks that should be lasting for at least the first half of this month. I think that you start to go into the blackout window a little bit for the January earnings season around December 20 something. So you got the corporates continuing to buy. You've got CTAs continuing to buy in pretty much every tape. You've got vol control funds continuing to buy because realized volatility has generally been pretty quiet. You've got hedge funds that were underinvested around the election that are continuing to buy. You've got retail that's continuing to buy. You pretty much got everybody that's continuing to buy. I mean, that's where a lot of these seasonality flows come from, is just a lot of times it's forced mechanical buying or selling that tends to happen throughout certain periods of the year. And as I was just saying before, everything from a positioning perspective, a technical perspective, it all just looks like we're set up for continuation. So I want to continue to be long this market. I want to continue to buy dips. I want to continue to, I like to say, I want to err to the side of being long unless we start to overshoot to the upside and get extended. But we're not extended right now for the S&P, the NASDAQ, or the Russell. So I'm just looking for further continuation. That's my expectation for December. And right now, so far, so good.
When it comes to this being the last month of the year, do you have any concerns about any impacts of like tax loss selling as the year comes to a close?
Sure. So that always impacts markets a little bit into the very end of the year. Usually what you see there, though, a combination of window dressing and tax loss harvesting will mean that the stocks that have been really weak and maybe are negative in the calendar year kind of continue to be a little weaker at the end of the year, because that's where people will tend to have losses that they can harvest. But the really strong stocks, people have no losses to harvest there. And as a matter of fact, almost the opposite. If you're like a hedge fund manager and you have not been long some of the best performing stocks of the year, you might want to get some on your books so it looks to your investors like you've done a great job. Because we know that the number one incentive of a hedge fund manager is not to make money. That's their secondary incentive. The number one incentive of a hedge fund manager is to accumulate and maintain assets under management. So they don't want to look like dummies at the end of the year if they were missing one of the top stocks. So they might still chase into some really good performers, while harvesting losses in some of the weak names. But it's such a strong calendar year. We're up so much on the year that I'm not expecting from an index perspective tax loss harvesting to really have any impact.
All right, tech stocks definitely are back to being the star of the market as of today. We have the NASDAQ, sitting at a record high, led by Tesla and Intel. Some news from Intel this morning. S&P 500 up, and then the Dow down a little bit, but the NASDAQ definitely being the star of the show when it comes to today. Do you expect that? We had a little bit after the election, IWM leading, the Q's kind of lagging. Do you expect end of the year to be all more about mega cap tech again?
So I would argue that even though the Qs have outperformed today and they outperformed on Friday, that overall the IWM is still the outperformer. If you want, I can pull up some charts here real quick that we can take a look at.
There you go. There.
Cool. So there's a SPY. You take a look at the IWM. So we can even go back to the election. So the Russell, we know, on the day after the election gapped up the most, gave some degree of continuation back here on November 11th, but was extremely upside extended. So even though I'm a bull on the market, into this move here, I have extension rules. We were looking for a short for a technical correction through time or through price, really for all three indexes. The IWM corrected most heavily from that extreme upside extension down. Whereas if you look at like the Qs, they kind of time corrected a little bit, but then had a bigger price correction as well. And then that was the viable dip. So that was the big technical pullback. Not that it was that big, but that was the big technical pullback that I was looking for to liquidate extension shorts and to build into longs. So it was really starting here in mid-November, starting really on this Friday, November 15th, that I liquidated most of the longs, most of the shorts that I had on, and really started building in on the long side to the point where I've been in 25 to 35 long positions pretty consistently ever since. I think I'm in 26 right now as we're having this conversation. And off of that pivot low, the Russell led back up again. So the IWM has probably been most volatile. But if you look at this IWM move here, this what is this 5-day move back to new highs was really wild. The Qs didn't participate like this. The Qs went sideways to up a little bit, while the IWM was just raging through the roof. And then here, the IWM was once again extremely extended back here on November 25th. So this is now about a week ago. I initiated another just cute short with a shallow price target on the IWM, just off the extension on that day. It was just a quick 2-day trade for me, and I was out. But since then, all the Qs have done is play catch up. So you can even look. So the way that I like to look at extension is where a market is trading versus the 8 and 21 EMA. So you can see here, just eyeballing it, the blue line is my 8 EMA, the red line is my 21 EMA. If you look here at November 25th, we were just extremely extended from the 8 EMA, which is what I call the upper band of equilibrium, let alone the 21 EMA, which is the lower band of equilibrium. So the last 3 trading sessions, the IWM has gone sideways to satisfy that upside extension, whereas the Qs really only in the last 2 days picked up with some relative strength. So this is actually another bullish signal amongst all the other bullish signals that we're talking about. This is healthy bullish rotation. The IWM has actually, in my opinion, still been the leader of this market, got overly extended, needed to take a little bit of a pause. So the Q said, all right, Russell, you need to take a little bit of a pause on having all this money get rotated to you. We'll just take the baton from you. We'll lead this market higher. And now the last couple of days, the NASDAQ has been ripping up. The Qs are up 1.2% right now as we're chatting, whereas the IWM is flat down really small. This is healthy price action. I would argue that it's still the IWM that's leading, but it's one of the most bullish signals that you can think of when you're thinking about bullish rotation of just whoever the leader is, they take the baton, they run with it, they get really extended, then they need to take a pause, they pass that baton to the laggard, then the laggard plays catch up, and then you kind of just rinse and repeat until your bull cycle is finished.
All right, great stuff there. Some of the leaders in that NASDAQ rally today, of course, are Intel and Tesla. Let's start with Intel. The news of the day being that the board ousted Pat Gelsinger as the CEO. What do you think about the stock? Rallying off that news. So obviously, investors hoping for a better CEO to come in and reinvigorate this company. What do you think about the stock here?
I like Intel. I like Intel. I think it needs to go through kind of a long restructuring process. A new CEO is probably a good part of that restructuring process. The market seems to like it. Intel's up 4.5%. I don't think that this is going to be like a barn burster that gets back to 40 something dollars anytime soon. But I do think that that there's enough value here in this company that as they go through this restructuring process, they should be able to maintain a floor somewhere in these 20s, these low to mid 20s. So this has been a name that the last several weeks I've kind of just consistently been selling puts on to take a stake that floor has been put in. And I'm just going to, bring in some cash while I watch this stock continue to hold up. And if for some reason it were to pull back to the strikes that I'm selling, they're out of the money strikes. I think I've got 24s that expire for this week that are still on. I had some that expired Friday. I had some that expired the Friday before that. If for some reason the stock were to pull back, I'm more than happy to actually take the stock at that price, even if it's trading a little bit lower and trade it. The ones I had on Friday last week were actually also expiring at 24. The stock closed at 24.05, and I was like, oh man, I actually wish it closed just below 24 instead of above it, so I could have been assigned that stock for when this news hit this morning. But that doesn't always work perfect. I'm happy just to continue to collect the premium. But I like Intel here. Maybe not for dramatically higher prices.
If someone was looking at that news and wanting to do something with Intel post the news, is there anything on the chart that should where you could see a trade being viable at this point?
I like my strategy, which I just went through. But this $25 level that it's above right now is pretty important. So you could look to be long, I think, versus 25-ish or versus today's low, which is the low of the news day, to see if you're able to get continued upside on the stock. A move back to there's a gap fill here to $29. I think the stock working its way back to $29 is very plausible.
All right, Tesla. Let's talk about Tesla. Got a big upgrade. Stock's up. Where did we go? Right under 358. I mean, the chart is Tesla's just still way up there in the sky, but the eight days catching up. So what do you think about Tesla?
So Tesla's an interesting one because I actually think it should be performing better than it is. If you go back to, and I see that I still have the screen share up. If you go back to November 25th, about 4 trading sessions ago, the prior day, which I think was a Friday, the 22nd, the stock had broken out through a pretty major resistance area around 348. And I didn't buy it that day, but a lot of my teammates in the ProDesk virtual trading floor did. It gave really good follow through. That should have been a day one, bouncing off the ADMA, off that upper band of equilibrium with this tight bull wedge that it had kind of built out, breaking through resistance. That thing should have been a day one. That should have led to a day two that got this thing up to like 370 or low 370s. And the interesting thing was that next day, this thing just failed all the way back down to that ADMA and then was weak for the next couple trading sessions in a row. So for me, that was a signal that like the major momentum seems to be a little bit behind us in this stock. I mean, it's Tesla. It can always come back. But I would even argue that today, with an upgrade, like you were saying, that this thing should be trading even better than it is. The Qs are going through the roof today. It's up 1.2%. This has been the leading stock since the election. It's only up 3.7% today. When it's the leading stock, when it's the strongest looking chart, when it got upgraded today, there should be. And if you look at the 5-minute chart, this is not a momentum move today. This is not what momentum looks like. Maybe the first 5-minute bar, but after the first 5-minute bar, that momentum just failed out, which isn't the end of the world. You got extension on a 5-minute chart. Sometimes you need a quick little pullback, but at a minimum off this pivot low that happened at 940, that should be a spot where then this thing is breaking up the highs, the ADMA on the 5 minutes catching up to that pivot, and then you're working your way through that 360 resistance area that I just mentioned, on track to get up to 370, 380. I would actually argue that, sure, Tesla's strong and it's actually trading near those highs even right now as we're having this conversation. It's up 3.7%. I think that this thing should actually be be performing better than it is here. So I don't love. I'm super bullish. We went through that already, but I don't love the idea of like chasing extension right now when the stocks are not showing. Some of these stocks, at least, not showing signs of continued momentum. The other one that should have went today, which, for disclosure purposes, I am short. This Palantir, somewhat similar to Tesla. This is the second day in a row that this thing really, really should have went. Not second day in a row, but second day in recent history, where it really, really should have went and failed. The other day was also back here on November 25th. I think that's actually the same day that Tesla should have gone, that I was just mentioning, and it failed. Had this beautiful day one, also on November 22nd, off of the ADMA here on the daily chart, breaking out of like this bullish wedge pattern. This should be a multi-day move. The next day, they gapped it up huge just for it to fail back down. Now, it hasn't violated this uptrend. It hasn't violated the ADMA. It is still trending higher. But then once again today, Friday was the half day. We had a little bit of an inside day, but this continues to be a bullish pattern. The stock was getting above the high of that inside day. This is also one. This should have, in my opinion, it should have gone today. It should have broken through the 68. It should have worked its way to the low 70s. It's just interesting to me that some of these momentum names, and there is a decent amount of extension here versus this 21 EMA, which is notable. Some of these momentum names are not exhibiting continued momentum. Specifically, Tesla and Palantir, the two big Trump election winners, should be flying through to their next levels, and they're failing to do so. And it's notable because sometimes, and I did say this back on the 25th as well, and it hasn't happened. Sometimes when you fail to get what should happen, it actually becomes a signal for the other side. So we should be breaking higher. We should be ripping higher in Tesla and Palantir. And Tesla, again, it's still okay. It's being supported by the upgrade. But if it's failing to do what it should do by the close today, maybe that actually becomes a signal that this Palantir, as an example, really needs to correct a little bit deeper down to this 21 EMA and satisfy some of this bigger picture extension that it has.
With a chart like that on Palantir, tell me why you're short.
I'm short because I'm fighting the stock, and I always am going to be brutally honest about what I do right and what I do wrong in trading. I am short. I'm out of the money. I'm fighting the stock. It really goes back to, I've been short this thing for a while. It goes back to something that I've spoken about a number of times, actually, back here from my original, the short that I had on November 13th. Which was meant to be a multi-day short off of kind of extreme upside extension. It doesn't have extreme upside extension now in the same way that it did because it's just been riding its ADMA up. This was a 1, 2, 3, 4, 5, 6. This was like a day 6, day 7 to the upside, where at highs on that day, the stock was trading at almost $60 with the ADMA at 56-ish and the 21 EMA at 49 and change. So this was meant to be like a multi-day short, and that was in conjunction with the market being pretty extended on that post-election situation. So I was looking for that extension short kind of across the board at that point. I was short, I think, all three indexes. I was short Palantir. I was short Tesla. I was short Coin. Again, all quicker trades. They all paid me except Palantir, and that was specifically because on the 15th, when the market continued lower, and that was the day I mentioned, that was the Friday when I liquidated like all my index level shorts because we got the correction there, and then really started to flip long. Instead of Palantir doing what everything else did, what the market did that day, Palantir went through the roof, even though the whole market was selling. That was the day that I think his name is, I forget his name actually. One of the members of the board of directors came out on Twitter and, in my opinion, just pumped the heck out of the stock and said, we're switching over to the NASDAQ so that funds are forced to, buy our stock. Passive funds are forced to buy our stock. We're here for the diamond hand retail holders to support them, more or less to make them rich. That's not a direct quote. I would have to look up the direct quote, but that's basically what he said. Came out, pumped the heck out of the stock. Stock went through the roof. And then it was shown on the same day that the CEO of Palantir, I think, sold $400 million worth of stock, while his member of the board was basically pumping it on Twitter and then deleted his entire Twitter an hour later. So I am still of the opinion that the board of directors of Palantir should be investigated off of what happened in that situation. To me, that seems like it should be a violation of rules, though I don't work at the SEC. But I have been committed to fighting the stock ever since. I'm not saying it's the right way to trade. I'm not the perfect trader. I don't always trade right, but I'm doing battle with this thing until I don't know, until one of us is dead, I guess.
Hey, sometimes you're human. Sometimes emotions can take over your trading. Speaking about investigations, SMCI announced today they did an internal probe and no fraud was found. Stock off to the races, up 30%. What do you think about that internal probe that SMCI did and how the stock is reacting today?
So I haven't done too much research on it, but my understanding is that at SMCI, there was a special committee that found the company did nothing wrong, as opposed to what their former auditors, the accounting firm Ernst & Young, had suggested. So SMCI is up 32% on it. The interesting part is I read that the special committee is comprised of just one person, an independent member of Supermicro's board of directors, who is an attorney of some sort. It seems a little bit weird that, you know, a special committee of one person is smarter than all of Ernst & Young, who would choose to give up business and not make money anymore because they don't want to be associated with the company. That seems a little bit weird to me. Again, I haven't done too much of my own research. It's just one kind of quick blurb that one of my traders showed me that I had read earlier. I traded a little bit of SMCI as a cute short today when it first got up to 40. I shorted it off of, this is, you know, the same extension rules that I was just talking about with daily charts. They apply on 5-minute charts as well. So SMCI had just done 5 big 5-minute bars in a row to the upside, was trading at $40 with the ADMA on the 5-minute at 38.30. So I shorted in front of that 40 on this bar here at 10.40 for just a quick, cute correction off of the extension down to the ADMA. It worked great. I made some money. I got out of the way. And then I stopped looking at it until right before we were about to talk. One of my traders let me know a similar pattern basically just happened, where once again really extended the upside, this time into $44 with the ADMA down at 42.50. That is like the exact same short as the one that I shorted, the exact same pattern pretty much. It also worked out really well, but I was a little bit late to type it up, and I had to join you, so I figured let me go chat with Greta instead of hammering SMCI to the short side and being stressed out and overly managing the position and being unable to speak properly.
Yeah, well, all right. I saved you from the pain
of making money.
Still no 10K though for SMCI. I mean, do you feel like it's kind of just like a cloud hanging over the stock, or the market?
Yeah,
whatever, we'll make our money. We'll talk about that later.
This seems like a short squeeze to me right now, and I'm not convinced that this is a real move. 45 is an interesting daily level. It just extended into 44, so it could be shortable into that area. I'll continue to watch it, but it's one of these names you just have to be careful, because you didn't want to be stuck swinging it short when this news hit or something like that, and then the stock's ripping 30% in your face.
Right.
Or the opposite could happen too. If you're long here and you're like, oh, this thing looks great now, like the special committee, whatever, and then, you know, someone comes out and shows that this one person, the special committee, is wrong or something, you could very, very quickly see the stock back in the 20s. So it's volatile, which has made for some really, really good day trading opportunities over the course of the last week or so here. I've been trading it fairly often on a pure day trading perspective and doing really well with it. I just love the movement, but it's one that if you're trying to be a little bit bigger picture on, I think you got to wait for more clarity. It's a pretty difficult trade.
Yeah. All right. With it being the first week of December, this week will end with a jobs report. We'll get several pieces of jobs data heading into that. You know, the JOLTS report, the private employment report, and then the non-farm payrolls on Friday. This will be the last jobs report of 2024 to be released in the year. We'll get, of course, one more for the end of the year at the beginning of January. I know you mostly trade technicals, but you do pay attention to the macro picture. How much does the market care, do you think, about this week's jobs report with a new administration coming in a month and a half?
I think it matters more for the Fed meeting than anything. So we have the Fed meeting next week, and this is going to be like one of the last data points that they're able to look at before they choose to cut or not. I think that it's very likely that the Fed is going to cut. I just think it's the safer move at this point. They can give us one more 25 basis point cut here at the end of 24. Then they've done a full percentage point at that point, and then they can really begin to reassess in 2025 as new data comes in and the new administration comes in. If the numbers are really bad, maybe it makes them take pause. So it's an important number, I do think, for the Fed. But unless we see something really out of control this week, then the Fed's most likely going to be cutting 25 basis points next week.
All right. Any final thoughts for the week before we close things out here, Derrick?
No, I continue to be bullish. I continue to be happy to watch this market grind up. I continue to be thankful, right? Thanksgiving that I got a market pullback that let me cover almost all my shorts except for Palantir, but even more importantly than that, in some ways, really get back on the right side of the market, get on the long side of the market. So I'm just continuing to be bullish, but I'm monitoring extension. If we get extremely extended in certain spots, it's an opportunity to piece out of longs, maybe put some cute shorts on. There's just been great trading opportunity almost every day. Like, this market's been great just because of the one-offs with individual stocks, whether it was that MSTR that we were shorting like 2 weeks ago, or today I was heavily trading this UMAC to the short side, which is my best name on the day, or we were just discussing SMCI. There's been so much tradable opportunity in SMCI over the course of the last week. This has really been a great traders market and environment here recently. I hope that continues as we get this upside grind in the market, but individual stocks are occasionally going nuts. That gives you great opportunity to trade both sides. So, that's it. Let's set ourselves up for a great end of the year, a great holiday season, and a great new year.
All right. Good stuff. All right. Everyone who's with us, if you want Derrick's free ebook about prop trading, you can go to t3live.com/DOLive. Again, that's t3live.com/DOLive to get Derrick's free ebook. Derrick, thanks so much for joining me for this today. I'll talk to you in a week, and good luck with all of your trading today and the rest of this week.
Thanks, Greta. Have a great day.
All right, you too.